Hi, this is me Deepak Shenoy on inflation, market cap to GDP as an indicator, bank credit and charts. But before we go there, what is this? This is a 5-minute video called Deepak Shenoy Talks, and this is the first of the series. I hope you like it. It's intended to be short and informative. First of the day is inflation. Here you have inflation today, and let's look at the primary articles inflation consisting of food and fuel, so more common man inflation. The last number we saw was 14.5%, which is an uptick from the week earlier. But I expect inflation to stay high, because if you look at this area around here, which is starting exactly around April 2009, inflation was depressed, it was below zero. So we have a low base effect that will come into impact the next 12 weeks. That means next 12 weeks, regardless of whether we are able to control inflation or not, the low base effect is going to show headline inflation as fairly high. This is the same case if you look at the monthlies as well. The monthly chart will show you the whole figure last year around March to September has been fairly low. So the low base effect is going to show a high headline inflation figure. Keep this in mind. We're going to keep the same theme on and look at another thing called market cap to GDP. Market cap to GDP is an indicator that might show you the sum of the total market capitalization of all stocks in India compared to the GDP of the country. I've used the estimates provided by the Economic Statistics Ministry, or the Ministry of Economics, and we see that for most of 2005 to 2007 GDP was considerably higher than the sum of the market cap of all stocks. But for a brief period between October and perhaps October 2007 and April 2008, a market cap shot up way above GDP, and immediately right in the middle of that cycle was a major crash in January 2008. Since then we've gone down to about a lot farther away from GDP, and then we're back up, and look at where we are today. We're at the 100% mark again. This may be skewed because we haven't got the official figures of GDP for January to March 2010, so that might show an uptick. We might just about be 99% of GDP, but we're right about there. The market cap to GDP as a percentage, if you look at the 100% line as a baseline, we see that there has been about 4 to 5 months where we've crossed the baseline and we dipped considerably afterwards. Now we're inching back up to the 100% baseline. I make no predictions. There may or may not be a bubble happening in stocks. I'll leave that for you to decide. But the data shows that we're coming to figures where when we were at this point, we were overvalued, or we got severely overvalued. Moving on, let's look at a bank credit in India. The bank credit figures in India has now grown to about 16.75%, and last year it touched a low of about 9.69%. So we've grown considerably since then to about 16.75%. The figure currently being approximately 32 lakh crores. The monthly charts, the monthly average charts show that Jan, Feb and March of this year have been considerably lower in terms of average credit growth compared to the last 4 years. But we're inching ahead, we're inching closer and closer to the point where we'll probably meet or beat in May the figures of last year. So there's a credit growth, a substantial credit growth, there's inflation, there is a potential bubble happening in stocks. All point to the fact that increase of interest rates is more and more likely. Quick look at a couple of charts that have caught my fancy today. The first of which is high-tech plastics. I had mentioned this on Twitter a few months back, maybe a month back. The stock has kind of stayed in a range for a really long time, and today it saw some tremendous volume and it's moved all the way up to about 110. I'm long since the 90 levels. So this is a pretty interesting move. Let's see where it goes. And the reason I think the move came was because the companies informed that they have had complete and commissioned plant that has commenced production, and this looks like an interesting piece of news. I picked it up largely because it was a very interesting stock with low PE, and it seems to have moved dramatically today. Let's see how that goes. Another stock that's interesting is Hero Honda, that is continuing to make new highs. Note now that there's an 80 rupee dividend that is effective as of tomorrow, so there will be an 80 rupee drop in the stock. The stock will probably end up around 2000, but look at the stock, look at the move it's been making over the last year. This has moved about 150%. Very, very interesting stock. Well, that comes to the end of this video. I would love to know what you guys think and what your feedback is. Please let me know what in the comment section or by email. My email is deepakshenoy@gmail.com.